very basic and relevant question when you talk about any product for investing consideration. Before I get into the product and its benefit to investors, let me just address the 2 to 3 common problems that all types of investors usually face during their investing journey. One of the most often heard issue that investors face is they didn't respect the price or the valuation and went overexposed to a particular asset class or a particular stock or to a particular scheme. The corollary to that is you don't have sufficient funds available to invest when the markets give you a correction opportunity. The second problem is the assets that you invested in are not lowly correlated, but they are very highly positively correlated. In other words, it means we have bought more of the same, which is we don't do that in our life. In every product, right from a household good to a dress or a shirt, we always try and buy what is not available with us or what complements our wardrobe or the gadgets that we have, etc. But when it comes to investing, a very common experience is people buy more of the same, and that leaves you with limited opportunities to enjoy benefits from something that is good, but you don't have the opportunity or the funds to deploy in them. And the third problem that you often hear is people didn't book profits at the right time, and which meant that they didn't also buy when markets were attractive. Now, all of these issues are easy for me to quote like this, but extremely difficult for any investor to execute. Very, very few investors in the world successfully do this and follow these 3 to 4 principles of investing, which is called fundamentals of investing or fundamental principles of investing. And they are the most successful investors that you come across. Now, how do you address a problem of how do you address this problem of handling these human biases? By building in rules for addressing them and also give them a layer of fundamentals of valuation and investing built into the product. That is what DSP Value Fund does for you. It buys good quality companies. I re-emphasize the word good quality companies because when you normally hear value investing, there is this belief that you're buying cheap stocks. We are clearly stating we are not buying companies which are of poor quality available at a discount, but we are buying good companies available at a discount. Just the way we go and shop at good branded shops when there is a sale happening. We know the quality is taken care of and I'm getting value for money because there is discount available. That sort of investing is what we define in DSP Value Fund as value investing. Do we restrict to domestic companies alone? No. A part of investments will be into the international piece, close to 35%, where we have identified excellent value principled managers who are time tested, who have invested for decades together and been successful investors. So the product gives you exposure to Indian domestic companies with good valuation attractiveness and to the international businesses which are again available at different points of time at a discounted price, handed over to the best of managers. It is like saying that if I own a cricket team, I would want the best players in the cricketing world to be part of my team. When it comes to managing your money, why shouldn't you aspire to have the best international managers managing your money? Through DSP Value Fund, you get that opportunity. And last but not the least is the part that I mentioned about cash in your portfolio. We often hear the statement cash is king, but cash is not king always. There are certain times in your investing journey you would believe that cash is king, and at that point of time, taking that decision for an individual investor who has a large share of human bias influencing him will be extremely difficult. Through this product, we have coded for it, we have mentioned the rules that will help us to identify those occasions and not deploy, which means I will not be fully invested, I would be booking profits, I would be not deploying the incremental flows that happens to the fund and wait for the right opportunity to reinvest when the opportunity unfolds in front of me. a combination of three things. The way concrete is created, there is sand, there is cement, there is metal, there is water in a right proportion. Imagine a concrete with any of these materials having been used in the wrong proportion. The concrete will not serve the purpose with which the building has to be constructed. DSP Value Fund combines three different ingredients, each extremely important for a successful investor's journey, in the right proportion so that your portfolio is rock solid. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.